Dogecoin finally has its day after Twitter agrees to a deal with Elon Musk. Welcome to the Daily Forkast April 26, 2022. I'm Justin Solomon of Forkast, covering all things blockchain. Dogecoin's price soars after Twitter accepts the Tesla CEO and fan of the meme coin's $44 billion offer for the social media platform. We'll take a look at that, plus a whole lot more coming up. Now let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off in South Korea with the registration of a patent using NFTs to prevent illegal copying of music. The CEO of World, which is a direct music trading platform, said that the patent marks the start of copyright protection in the growing music market. In a local media report, Kim Han-jo added that the company will introduce music using digital certificates to prevent sales of counterfeit products soon. World, which launched last year, distributes 80% of sales revenue to artists as royalties. That's in a market where many local streaming services have been criticized for distributing less than 20% of profits to copyright holders and performers. You can find that story and a whole lot more at Forkast.News. Meanwhile, Elon Musk has got his wish after Twitter accepted his $44 billion bid to buy the social media platform. And news of the deal set Dogecoin on a tear, leaping back into the crypto top 10. Forkast's Lachlan Keller has more.
The world's leading meme coin jumped almost 20% after the deal was agreed, making a return to the crypto top 10. It reached a high of almost 17 US cents overnight before retreating closer to the 15-cent mark by Tuesday morning in Asia. That was the highest price since Musk revealed he had accumulated a 9% stake in the company to become Twitter's largest individual shareholder earlier this month. Musk has long promoted Dogecoin to his 84 million Twitter followers, and after the idea of a Dogecoin tipping jar was suggested, he later proposed it as a feature. Twitter initially adopted a poison pill plan on April 14th after Musk made an offer of $43 billion for the platform. A poison pill allows other shareholders to purchase additional shares at a cheaper price as a defense tactic to prevent a hostile takeover. The $41 billion offer that Twitter has now accepted comprises of $21 billion of Musk's own money, with additional debt funding from Morgan Stanley and others. Musk has signaled that he wants to champion free speech, as well as making the platform more transparent and to crack down on bots. However, the deal has attracted criticism from the like of US Senator Elizabeth Warren, who said that it is dangerous for democracy and that strong rules are needed to hold big tech accountable. For Forkast, I'm Lachlan Keller.
A much-awaited crypto offering is facing a delay in the land down under. Less than a week after they were officially announced, the exact launch date for Australia's 3 new cryptocurrency exchange-traded funds, or ETFs, is now uncertain. The 3 ETFs were expected to go live on the country's CBOE exchange tomorrow. In a statement shared with Forkast, Evan Metcalf, head of product at Australia's ETF Securities, said they learned on Friday that a downstream service provider may not be fully ready to support the launch. However, work is being done to address this as soon as possible. And in its defense, David Tuckwell, product specialist at ETF Securities, said no one's ever launched a crypto ETF in Australia and that everything's being built from the ground up. ETFs allow retail investors to gain indirect exposure to an asset through stock trading. So just how will these new ETFs move the market when they do officially launch? Let's find out from Damien Lowe, CEO of Matrix Asset Management. Great to have you with us, Damien.
Thank you for having me, Justin.
Now, Damien, Aussies are going to be spoiled for choice with multiple crypto ETFs on offer shortly. What kind of demand do you anticipate? What are you going to be watching for?
So I think that the demand will be quite large. Looking historically at ETFs that were listed in different jurisdictions, it's always had a great demand, and you can definitely see that there is an interest for crypto. Some people are hesitant in terms of maybe not having the right technological expertise to be able to invest in it firsthand. So the ETF is kind of a way for them to really get exposure without having to deal with all the technical issues overall. So I definitely think, looking at how ETFs were listed in Canada and the US before, that there'll be a great demand for it overall.
ETFs are a great way for people to take passive investment bets, and in case of crypto ETFs, it gives those who are yet to get familiar with crypto or fully understand the risks of this asset class a chance to diversify. Could the ETF route become a key factor in mass adoption?
I think so, and it really depends on whether the ETF spot version really takes adoption overall. What we've seen is that some of the ETFs are based on like futures, where the underlying is actually them buying futures rather than the coin itself. Others have a really high management fee, and others are actually buying other ETFs or other funds that invest in Bitcoin itself. So I think if it becomes the version where it's only the underlying is that they're actually buying the coin itself, then I think the adoption will be a lot higher and it will be a lot faster as well overall.
The way the ETFs are structured is also really interesting. ETF's 21 shares offering will hold Bitcoin and Ether in cold storage. Cosmos will be investing its funds in a Toronto-listed Bitcoin ETF. What would be the difference in the two strategies?
I think it's basically people trying to figure out what the market specifically wants. And I think for the former, if they're really targeting the audience that are looking more for safety and maybe a little bit of diversification and not only having Bitcoin itself, as you mentioned, Ethereum is also offered there. And the second one, I think, is a tried and tested way. It might be a little bit more expensive because it's not really buying the coin itself, and everybody along the way has to be paid on that. So that's something to consider, and something I'm sure the investors will consider as well. Having said that, I think they've done that, for the purposes of speed. They really want to get it to the market before somebody else beats them, and it really is a testament of the regulators, being a little bit slower, but the private market really wanting to, having sensed the demand and really want to get a product out there for people to invest in as soon as possible.
Certainly a topic we will be keeping our eye on. Great chatting with you, Damien.
Thank you, Justin.
And that's the daily forecast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Forecast Justin Solomon. Until next time.